Welcome, and I'm going to talk to you about stocks today, and one particular strategy I like a lot, and it's about bear rating. I think bear raters can make a lot more money than traditional traders if you are very, very thorough in your strategy and your work. So we're going to have a quick look at that. So I'm going to, as we go through some examples and talk about stock trading with Trade the Easy Way, you will get to see something of our strategy, something of the strategy we teach, and something of the strategy that we obviously put into practice. All right, so obviously, we've been a raging bull market. So why I'm not going to sit here and just try and short everything. Why? That's ridiculous. So what I'm trying to do is I am looking for I'm trading trends like everybody else, any other sensible trader. So there's a huge, great big trend line that we are still following, even though we've had some selling today. What I am doing though is I'm looking for particular opportunities in the market, and that's the beauty of stock trading. There's always stocks in a bull market that will fail and roll over, and there are always stocks in a bear market that will skyrocket. So, not just skyrocket, but certainly climb. So it's a question of having a balanced portfolio, having a balanced risk, and having a strategy that can enable you to maximize the capital you've got in your account and to grow your wealth. Now, I think that if you want to, anybody who needs to grow their capital, which is all of us, and their savings and their pensions, need to be in stocks. No two ways about it. But the thing is, with all this trend for Forex and Bitcoin and so on, I think a lot of people don't spend anywhere near enough time on stocks. But that's very much their loss if that's what they're doing, because I think there's daily opportunities in stocks. It's a question of just having the skills to go out in that market and exploit it. So why would I be a bear rater in this kind of market? Well, I wouldn't unless I had real reason. So what I'm looking at is I'm finding opportunities that can take advantage of a changing situation. So what I'm going to show you is, before we move away from this, let's just look at what we've got here. Just grab the pen, a sensible colour. Right, so we have, if we look at the beginning of the year, so we had the big push as Mr. Trump came to power. This is the NASDAQ daily chart, and a little dip into the early part of the year. There is a reason for that. It's because if you are in the States, you need to, the tax reason, the IR35 means that you need to square your account off at the end of the year. So you tend to get a lot of push after Thanksgiving into December, and then tailing off from the back end of December into January. Okay, this is a typical cycle. Everything's got a reason. If you think these markets are totally random, then stop trading now. There are good technical reasons for most of these moves in the market. Any chart you're looking at that isn't very technical, stop trading it. Okay, so beginning of 2017, we came into January. This resistance became support, and off we start. So we get 1, 2, 3, 4, 5. So it's a 5-wave move there, and then a 1, 2, 3 correction back into support, and then we start a 1, 2, 3, 4, 5. Now we're in a 1, 2, and then we're just now in a 3-wave correction. So that's a 5-wave there, 3-wave correction, 5, and we're just in a 3-wave correction now. So if we can come into this support for the sort of second half of November, or maybe even earlier, who knows? And then I think we can potentially come and see 6,500 up here. Who knows, maybe even more. So that's knowing your cycles is one thing. Understanding wave movements, all good liquid technical charts will follow that sort of pattern. So that's element number one in stock trading. Well, any trading come to that, but particularly stock trading. And the other element that I use in stock trading is to become a bear raider, which is just a part of my strategy. I'm looking for game-changing situations. So I'm looking for fundamental changes in the market. Can you think of any fundamental changes in the market that have happened in the last 1 to 3 years? I've got some examples here, but I just want to throw that out just to see if there's anybody in the room that's got something in mind. Okay, well, I'll throw one in, and then maybe it'll get you thinking. I was looking, over the last couple of years, I've been looking at the growth of Amazon and online shopping, so I can't write with this guy. So, it struck me that there's Amazon and eBay and Shopify and whatever they're called, they're all really taking away significant bites of the old bricks and mortar. So whilst this NASDAQ was shooting up and trending really, really well, if you look at a stock like this one, this is going completely the opposite direction to the NASDAQ because of a fundamental game-changing event in the way in which we behave in the markets. So why is this? This is just one of several examples I've had fun with over the last couple of years. And you will see that here's a decent gap. So even in 15, we saw a big run to the upside and then this huge sell. And we got to such an extent that we gapped down. So, at some stage, you're going to get, this is into the back end of 2016. In the back end of 2016, this got bought. Some bargain hunters came in, it pulled up into this moving average, dropped down. First test of a moving average, normally a fade. That's what happened, and we pushed up. So here we have 1, 2, 3, 4, 5, 1, 2, 3 wave correction. So what am I going to do with this stock? Well, I am going to pounce on it. I'm going to raid it every time it drops, every time it pushes up and looks high. So what I'm going to do, so what I was doing, I was calling trades in this one. Every time we got into an area of resistance, I would short. 1, 2, 3, and we even gap down. We recover, we, close the gap, and then we short. I've been doing this on day trading today as well. The indices have been brilliant today. Started shorting in the trading room this morning, and so all those new Scalper School traders are hopefully really beginning to, if they haven't already, beginning to put their recover their fees. So this gaps down, gaps down here, and it even gaps up here. Well, that's fine because that gaps straight into an area of resistance. So any sell signal up there I'm going to take, and then we get the move down. So it starts to actually look quite bullish here, and this is a decent push up here, but then as soon as we get to that high, let me enlarge this so you can see it clearly. As soon as we get to this high, we get a beautiful sell signal. We make a new high in this little run, and the very next day we close below. That's potentially what we got on the Nasdaq today, depending on how the market closes. So it takes about a week. So we drop, push back into that resistance, and then they just let it go. So what I'm doing in my strategy is I'm waiting for these high levels. Once I find a stock like this, I'm waiting for these high levels. Yes, I will. I will cover the Dow. I will, and then just short them. I'm not going to randomly short highs, but I certainly will wait for these signals and wait for them to. So I took part in this. I actually took it off at the lows and left it alone, but then we get a very nice push up. We almost just about closed the gap. Very nice technical move on lower volumes. So all the time this is going up, the volumes are getting lower. So would you believe it? Puts in a sell signal, and then we start another wave down. Pulls up into resistance. Lovely move. Failure at the moving average. At the 50-day moving average drops down. Okay. So what I'm doing is I'm looking for. Also look at the cycle. We get into. This is a store. It's a big retail outlet in the US. So typically in the run up to Christmas, in the second half of the year, especially in the autumn, you get the push higher. So I'm looking at cycles. I'm looking at behavioral changes. Can't even write it. So that's one. That's two. And then I'm drilling down into sectors that are going to be affected. And then once I've got the sectors, I'm looking for the best players, particularly areas that have already had huge waves down. So I'm buying pullbacks into. I'm shorting pullbacks into retracements. That's the name of the game. I want stocks that prove themselves to be in a particular trend, and then I want to raid them as soon as they get anywhere near healthy looking. And even now, even this week, in the run up to Christmas, we've got this is in May, sell in May and go away. Another typical obvious trend. It sells, it pushes back into resistance, it sells back and back. And even now, I haven't looked at this today, but we are actually getting close to a situation where maybe these guys are going to go under. So we're looking at a stock that's gone from 42, 40, 45 area. It's halved. We've had significant moves, opportunities on the way. Let me show you some others. This is just one situation. We'll look at some others in a minute. So let's look at SHLD. Now you can see this in UK stocks as well. We'll have a look at some UK stocks as well. This is classic bear signal up here. A new high in this little range, immediately closes below in April. Pushes back into that resistance area the very next day. So that goes from 14, well now we're right the way down to 5. Even on this little run, the first leg down comes into about 9. So you've got good 40%, 30-40% drop. If you're a chartist, you've got a shoulder, a head, and a lower shoulder. It breaks the neckline, and wham, comes down very, very nicely. So beautiful. That's just one sector. Excuse me. Anybody think of another game-changing type event? It doesn't have to be a detailed one. Just think of some obvious game-changing events that happen in any one year. Anything? Let's look at, yeah, that's on my list actually. Well done. Yeah, electric cars. If we look at General Motors, because I'm looking at this one first before we look at Tesla. So, there's a move to electric cars, isn't there? Tesla are really pioneering some fantastic cars. So you get the move. I'm not just thinking of Tesla in particular, but the move from owning big gasoline cars has affected the markets. So you get a push to the upside. Come on to Tesla in a minute. So once you get decent push to the upside and then a drop, I'm not interested in the first drop, but I'm certainly interested for any sell signals subsequently. So that was a decent move, gapped up, immediately closed lower. It's a great sell signal there. That generates a couple of weeks of selling. Back into support. So you could have, this one was shortable as well. This was a sell signal up here, new high, immediate close lower, and then subsequently that is still dropping. So if we look at Tesla itself, okay, that I'm talking about bear rating, but that's Tesla is the flip side of that. So let's have a look at Tesla. Having a bit of a tough time, isn't it? And it's good to, even in this bullish market, here we are talking about shorting. I'll cover that question in a minute. So previously shorted here, runs up into the area, and new high immediately closes lower, and then we get 1, 2, 3 wave drop back into support. In fact, back into this support. So yeah, this is something you could raid. There's a sell signal. This one doesn't work. You get a new high, immediate close below. That's fine. They don't always work. Pushes higher, a new high, immediate close below. That one does work. So if you manage your risk, you can achieve these. So the higher the MACD, the better. Particularly if you get that sort of crossover as well at the top. This one was very divergent. So you can use MACD as another indicator that this market is exhausted. Then you can see that the volume in this is really dropping off. These highs are lower on the volume as we are pushing up. That's a classic sign. So you got that ticks a box, that ticks a box, and then you get the candle signal up here. So and the history of this dropping. So to me, raiding stock, even a strong stock like that, I wouldn't necessarily look to short that one. I've been looking at these retailers. Let's look at, before I answer a couple of those questions, I am just going to look at some UK examples. So here we are with Next. And Next has seen, it has got its own online example, but this is a good example as well. There's the sell signal. So you're rising up, new high, immediate close below. Let me just enlarge that because you can't see that very clearly. Get rid of that. So a great sell signal. It's my, if you're going to short, do a scan for stocks like this. New high, puts in a sell signal there, it closes lower. That doesn't work. Now notice the MACD is not that high, and the histogram at this point, we gapped up. So I wouldn't short that. I would not short that. However, we get a push up on lower volume. We've got a high stochastics, and we get a sell signal. Now this one has been a great short in the past, just like Macy's and Sears and so on, as I've been talking in the US. For the same reason, this market has gone through a game-changing event, and you saw this really struggling up here, and so you get, look at the volume here. Volume's lower as we try and creep up. So that sell signal at that resistance is wonderful, and you're getting divergence. Once it breaks, you've got history down here. I'll get more on my screen in a minute. So the chances of that dropping into these areas is extremely good, and this drops from 75 for ultimately down. Once you get the consolidation over here, the very, very bearish consolidation. Never trust a chart that can't close above a moving average like that one, and then wham, you don't know that's coming. There's no clue at that stage that it's coming. All you know is it's a very tatty chart and it keeps selling. All right, so that's another example of how. So what I've done is I've identified a key game-changing event like shopping online, obvious one, and then identify targets that could help me achieve the sort of results that I'm looking for to build my account. Right, couple of things. Any other events? An obvious one I was thinking of talking about with you is oil. If you've got oil climbing up, what would you expect? If oil's climbing up, what would you expect in the market? You're only trading indices, okay. Well, if you're only trading indices, I would suggest you need to trade stocks as well if you want to really build your account. Indices and Forex, okay. All right, let's talk about that. Let's talk about game-changing events in Forex then. Let's pull up an example. What was the main game-changing event on this? I'm not thinking of the crash. I'm thinking of down here. What was the main game-changing event of, where are we? Not gone back far enough. Let me get some more data on the books. Okay, well, I was pulled up a monthly, that's okay. What was the main event here? Let me just mark it. Anybody know what the main game-changing event was around here? This is obviously the 07-08 crisis. I don't need to point that out, do I? Main game-changing event here was by the time we got to this stage here, the Bank of Japan had changed finance ministers literally something ridiculous, like every 3 to 6 months. And in fact, they had elections, all sorts. They were in quite a mess. They had, and they announced at this stage here, the most aggressive of all the quantitative easing of any central bank in proportion to their account. This was the most aggressive quantitative easing of all in Japan, of all the central banks relative to the size of their economy. So when I went on Dukascopy TV, one of the big European brokers, I said this thing is going to fly. They asked me to give them some predictions. I gave them predictions of these sorts of levels, and they didn't produce it. They didn't release it. They thought I was mad. So anyway, if you are trading forex and indices, look for game-changing events, and Bank of Japan is one of them. What's the one that's coming up? If you're forex traders, what's the next potential game-changing event of all the central banks? Anybody? I think the next game-changing events is but which central bank? Which one are we looking at? I think the next one is going to be let's look at let's look at this one. I think that it's Europe. I think the next event amongst central banks is going to be Europe. Europe has been easing for without any pedaling back on the pedal, and I think that's got to stop. I think we've already got inflation creeping in and the UK. We've already got inflation creeping in. We've seen the UK raise rates. We've seen the US pump rates up. I think we could potentially get another 3 rate rises between now and next year, next 12 months in the US. So I think Europe, ECB are going to finally have to bite the bullet. And they can't go on easing. Otherwise, they got literally, if there is another financial crisis, they got no bullets left in the gun. So I think this one, the reason why this is gapped up and held up is because the market's pricing in tapering. So if this holds, maybe if we see a dip into 130, maybe if we come out of this channel, it's quite. I find it's quite typical with markets that if you can have a clean channel, and then when there's a move coming, when they break out of a clean channel, because if it then holds this area and comes back in, you potentially got something that could motor. So that's why I'm keeping an eye on this one. So I still think we've got some potential lower levels, but I think we need a retest of this support, 130, to get this market going. MACD would confirm that. I think we've got divergence here. So this has been going up with a lower high in the MACD. So this is a daily chart. We're just coming we're under the midline. But once this MACD can just come under and the histogram can get back above the midline, I think this can start to climb. That's my theory on that one. Anyway, so we've got you in here to talk about bear rating on stocks. So before we switch to the indices, I will just cover a bit more ground on that. Because if you look at, let's look at another game changer in the UK. I think this one is good. So I talked about this one in the video at the weekend, and I'm happy that this is blown up because we are still not got. That's yesterday's signal. So I need to start shorting this. I don't know what the updated number is on this, but if we start getting some confirmation on this, I would short this and look to see if we can drop back out of this down to 120 and lower. We've got a nice history of this shorting up here. So in August last year, we were up at 157, and at the lows, we were down here under 108, or just above 108. So a decent move, and so I'm just coming into some resistance at 140. So I'd like to see some resistance in that one. Okay, so we talked about how we can use game-changing events in behavior and in markets. We talked about technical issues to do with wave counts, use of MACD and volume, and moving averages, and of course candle patterns as well for confirmation. So that's the sort of thing that's the reason why I'm a bear raider for part of my trading, part of my strategy, because I think that is a extremely valuable part of being a good trader that knows how to spread their risk. Right. Indices. This is only got end of day. I just have to quickly come out of this. Bear with me 1 second. I will come out of this. So, as far as the indices are concerned, yeah, I had a reasonable day on this today. We took the usual scalping position. So I had a few slices of this on the way down. So let's just look at the bigger picture. Call my daily chart over here. Right, so we talked about this selling sell signals and subtle sell signals from Friday on non-farm payroll, would you believe, and some subtle signals in low volume yesterday. So here we got the follow through, and we've got 1 hour and 25 minutes for the Dow to close. So I'm waiting for all these indices to come in contact with this 20-day moving average. I think that's the first stop, and assuming this is still bullish, I think that will push back up. If we just push back into resistance and put another sell signal up there, then I would start to look for this 12,950, or obviously 13,000. All right, but this is quite typical this time of year. If you look at this time last year, let's have a look. Well, that was a bit different. Let's go back to the previous year. Let's go back to 15. This is not untypical to see. This is what I would expect for this year. I would expect. So we had a good October here. Get a different color pen. Good October in 15 here. Pushes up into November. Dips in early part of November. Second half of November we push up into early December, and this is where you get the technical. You get start to see some profit taking in the US because of the way their IR35s work. So once we get these legs up here in early mid-December, then you tend to get the sell-off into early January, February, and then it gets bought into May normally. Okay, so this is what I'm looking for now. We are at this period in this part of this year, so I'd expect the drop, then another push into 65 from the NASDAQ, and then I expect to see some selling into mid to late December, and then follow through into January. That's a very, very typical cycle. There's a website that I use all the time. I can't remember the name of it because it's always on my that shows you, if you Google stock cycles, you'll find it. And I've got a copy of it. Equityclock.com. Equityclock.com. And there's cycles for forex, stocks, stock sectors, indices, everything. And that will tell you what the normal cycles are. So that's what I'm looking for in indices. So that's a very quick introduction to bear rating on stocks. And for those people who are interested, there obviously I've got some stock master course coming up. And if you are interested in this stock master course, then let me know. Drop me a line if you want some more information on it. So this website's just going through an upgrade, so I haven't replaced that video yet. But take a look at what we offer, because if you are, it's a long weekend. We even cover options. We have 5 key strategies for trend, reversals, bear rating, and other types of stock trading, including options. And even if you've never done options before, you need to know what options are about, because there's a lot of money to be made in options if you know what to do. And there's a very, very simple way of getting into options without risking any money. Okay, so any questions on bear rating? Let's look at a stock. Let's look at Macy's right now, and some of the other examples I've been trading over the last two plus years. So this is having a great time. What have I done with my daily chart? Oh, there it is. So you can see how I've marked this one up. This is how I've been trading it. And wow, I mean, this could just, at the moment, this looks as if it's going to zero. This is having a horrible time. Really, really horrible time. And you know, this is a stock that not that long ago. Where are we? Let's get as much data on this as we can. So not that long ago, this stock was $73 in July, 2 years ago. Just over two and a quarter years ago, this stock was $73, and it's just not. We look as if we're coming down to 5. 5 is the low. That's a huge drop. If you know how to trade, how to bear rate the market, you can make such good money. All this business and training about Bitcoin, I think, is a waste of time personally, because once you get these stocks like this, there is a lot of money to be made. Right, there's no questions coming in, so you've got my view on the short to medium term of the indices. You've had an introduction to bear rating and the sorts of things you can get up to if you are good. If you learn the skill of identifying game-changing events and drill down to sectors and pick the right time in a cycle to get into a situation like that, it is very, very profitable. And yeah, a lot of people there's not that many people out there that I see doing, or not on a retail trading basis anyway. Okay, so I'm going to finish up now because I didn't want to sort of make this into too long a presentation. And if there's no more questions, I will thank you very much for coming. Stay tuned to the emails if you're not a member, because there's other events coming up. And so I will be inviting you to one or two other events that are coming up. If you are a member, then there is a lot more going to be happening in the coming weeks, particularly in the new year. Much more to add to all the time input that I'm putting in already, because there is obviously constantly trying to expand the services and look to give you more value. Okay, all right, well, thanks very much. No more questions, so I will finish up there. Have a good evening and look forward to hearing from you again. Bye for now.